What happened in the market through the end of November? I'll break it down next. You're definitely going to want to watch this one. You've heard this before. The number one question about real estate is, how's the market? What's going on in the market? What should I be thinking about if I'm looking to make a real estate decision in the next 6, 12, 18 months? So here's the latest data for the greater Philadelphia area, Chester, Delaware, Montgomery counties, and the city of Philadelphia. The median sale price year over year through the end of November is up 8.8 to 11.5%. That is monster appreciation in a 12-month period. So we're seeing home values continuing to rise, in some cases almost 1% a month. The number of homes that sold is up anywhere from 12 to 23.8%. So for all the people out there saying there's nothing for sale, there's no inventory, the number of sales were up double digits across the greater Philadelphia area. So it's an important thing to realize when you're looking for properties. We'll get into why next. Average days on market, Chester, Delaware, Montgomery, between 19 and 21 days. In the city of Philadelphia, the average is 36 year-to-date through November. Sellers, on average, in the suburban counties are getting 100.6 to 101.7% of the asking price. And in Philadelphia, they're getting 97.5% on average. So suburban counties, if you're worried about adjusting your price and having to negotiate down, the average is above the asking price. Really important to realize. Philadelphia, you're very close and higher than the historical norm. So sellers are getting more money for their homes. Inventory right now is between a 0.87 to 0.98 month supply. So right just under a month supply in Chester, Montgomery, Delaware counties, and in Philadelphia we're seeing a 2.36 month supply. So historically, inventory very low compared to norms, knowing that that 6-month number is the place where buyers and sellers typically have equal leverage. So very clearly a seller's market. New pending sales are less than new listings everywhere across the metro market except Delaware County. And the number of new listings that hit the market through November are up 3.9 to 12.2%. So again, for all the people saying there's no inventory, we're seeing a rise in inventory year over year through November. And lastly, mortgage rates are still highly affordable. 3.125% plus or minus on a 30-year fixed loan with a conventional loan amount, and jumbo loans are coming in at 3.25% on average. So what's it mean? So if you're selling a home, or you're thinking about selling, or you're just even starting to kick around the idea, here's what I know. Right now, rates are very low. They are very clearly going to be going up by the third quarter of next year. All the economists out there, Brian Buffini, Lawrence Yun, all the experts, Fannie Mae, all these people, and all these people that get paid to make predictions, by the way, they are predicting that the Fed will be increasing their rate by the second or third quarter, which typically has an inverse effect on the 10-year Treasury bill. And that what that means is when the yield goes down on that, rates go up and vice versa. So look for mortgage rates to go up middle of the year. So if you're thinking about selling and you want to get your best price, the best time to do that is when the affordability is at its highest. What we also know is that inventory is rising. Inventory April and May was in that like 3/4 of a month supply in the suburbs, a little less than 2 months in Philadelphia. We've seen it rise a bit here. And what we know is this: the best time for sellers to have their home on the market is when the neighbors don't. And seasonality is back in the real estate market. We haven't seen this for about 2 years. Now what we're seeing is January, February, people start to get their homes ready. They start to think about it with a huge influx of inventory March, April, May, June. If I was a seller right now, or you asked my advice, which is what people come to us for, I would be looking at getting my home on the market now and beating the competition while affordability is peaking. You're getting great prices. Inventory's still low. All these things add up for a seller to get more now than if they wait. Because when there's more inventory and rates are higher, the cost of the dollar's more and there's more competition. If you're a buyer, I'm looking at those same factors and moving quicker. Because if rates go up, your payment went up. No control over anything else. Prices are not projected to go down until at least 2024, 2025, 2026. We've got a run ahead of us here. So with the millennial homebuyer demand coming in, where a lot of these people are still looking for homes, and there's over 78 million millennials in the country, figure 35 million of them are buying properties with marriage and not everyone buying a home. That demand's not letting up because they don't own properties. They're not selling something to buy something else like some of the other generations. So knowing that's the case, that competition's going to be there, and the inventory numbers show there's more opportunities. You've got to hook up and connect with a realtor that's going to be able to get you into properties quickly and efficiently. Sometimes you only get a day or two. The best homes sell quickly. I'd be focused on taking advantage of rates if I'm looking to make a real estate decision on the buy side in 2022. Don't wait, because when you wait, what's going to happen is the cost of money is going to go up and your payment's going to go up, and you're losing out on building all that equity that we're seeing appreciate year over year. Obviously, we went over a lot of data. There's a ton of information here. If you've got specific questions, get in touch with us or at least call a local agent who knows what they're doing so you can make a sound real estate decision. That's your November 2021 market update. You're definitely going to want to watch this one.